It is now my pleasure to introduce our leader, OFN's President and CEO, Lisa Mensah, and CFO, Beth Lipson. Thank you.
Thank you, Jim. So lovely to be here with everybody. Happy Veterans Day. Thanks to all veterans listening. Thank you for your service and protection. And to all of our members, thank you for joining us. Thank you for those wonderful board candidates. We're so glad that in this time there are people willing to step up and give this precious commodity of time to us. So thank you. We're going to take it to the next part of our membership meeting. And it just gives me another chance to highlight what it is that really draws us together as a network. And for me, that's this cause of financing justice. And this has been a year when it's just so clear that's what we're about. So I hope you're feeling, wherever you're tuning in from, that this is a moment for us to really be together, to lean into the network, and we are together. So I thought we would start this meeting. This is our membership meeting. We're going to give you a review of some of the things that have been happening this year. But I thought we'd start by thinking about how so many of our members stepped up in the pandemic. And I want to give you just two examples of organizations of our CDFIs who really stepped up. And I want to start in New York City with Renaissance Economic Development Corporation. And that's led by Jesse Lee. Renaissance Economic Development Corporation leaned immediately into this pandemic and started an emergency small business relief fund. Many of you will recall this because Jesse was one of our first inaugural webinars that we did in this time. And Jesse shared what it was she did to create this special fund in the middle of this pandemic. So kudos to you, Jesse. Thank you for your work. It was an example of stepping up. Now, that's not the only thing that happened. I want to give another example of CRF, Community Reinvestment Fund, based in Minneapolis. CRF was another example of tremendous stepping up at this moment, and particularly with the government's Payroll Protection Program, PPP program. They partnered with so many CDFIs helping them to gain access to the program. They partnered with IFF in Chicago to help nonprofits in the Midwest. They partnered with a Native CDFI network to ensure that Native CDFIs could gain access to the critical PPP program. And they partnered with the Florida Community Loan Fund to help Florida nonprofits gain access. So shout out to Frank Altman and to your beautiful team at CRF for the way you stepped up. So if I didn't call your name, don't worry, I know you stepped up, and I'm so thankful for that. I wanted to say a little bit about the growth in our membership. And this has really been something extraordinary. In 2019, as you will recall, we changed our membership criteria to allow more CDFIs to gain access to our network. And we wanted to leverage this network and to grow into a more inclusive network. And this has really started to happen. If you were to look at us back in 2010, we were a network of 137 members. Fast forward to 10 years, and we are now 337 members strong. And I wanted to share with you a little bit about what that growth has looked like in the last year. So I want to share three numbers with you. There have been 57 members joining. 34 of them, of our new members who added in 2020, are led by people of color. 10 of these new members are Native CDFIs. And 20 of these new members are focused on rural markets. So that's a really wonderful new set of colleagues to join us as members. And it really shows how our network is going ever deeper to address the needs in America. I want to share the story of one of them. It's the Native 360 Fund in Grand Island, Nebraska. Native 360 Fund is focused on small businesses. It's providing affordable credit, capital, and technical assistance to build strong and sufficient Native American business owners. And they serve members of all the tribes in Nebraska and in Iowa and in Southeast South Dakota. So we want to welcome Pete Upton and your team to the OFN network, one of our important new members. Now, you know me, I talk about money, strength, and voice as being the things that OFN does. And so strength is our work with members and this conference and our various events. Voice is something that's really been on display this year. And I want to start by saying a shout out to Lena Page and her team, who really helped us take a moment of great press interest in our work. This was an unusual year. Finally, our relatives and family members might have heard of us this year. So many major media outlets covered our work. That includes things like the New York Times and CNN and the Wall Street Journal and Bloomberg and Washington Post and Impact Alpha, Reuters and CNBC and Black Enterprise. So this was just an extraordinary year. Of course, it's extraordinary for a painful reason, but it was a year when our voice and our message about who we are reached really important networks. And I'm just so glad to report that. Of course, the voice part of the OFN work is not just media, it's also advocacy. It's also our political voice. It's the important work we do to educate and inform policy leaders. And this again was extraordinary. You're probably looking at a picture of me with Maxine Waters now, who chairs the House Financial Services Committee. And I think it was just a testament to the time that, the House of Representatives started doing virtual hearings this summer. And the first virtual hearing, so this will be for the ages, that they held was called Promoting Inclusive Lending During the Pandemic, Community Development Financial Institutions and Minority Depository Institutions. So for the first hearing of the Financial Services Committee of the entire Congress to be focused on CDFIs and MDIs, to me, is extraordinary. And it shows how much the leaders understood you and your work and our collective work and our role in this economy. Chairman Waters attended this hearing, but she also had a private call with myself and several CDFI leaders. She understood what we're trying to do. She understood it in a very granular way in her hometown of St. Louis, Missouri. We were able to connect her with Justine Peterson and to show what it means to be supporting the kind of small businesses. So for us to have our voice really reach leaders in this way at this time is really important. So big year on both our strength side and our voice side. And I'm going to ask Beth to talk about our money side, because this was indeed a year to finance justice. We are privileged to have an amazing Chief Financial Officer in Beth Lipson. And Beth, I'd love you to talk to the membership a little bit about what's been happening with the money side of the house.
Sure. Thank you, Lisa, and good afternoon to our members. I wanted to share with you how OFN's solid financial position in 2020 really allowed us to focus on supporting our members to withstand the crisis and to finance justice. For OFN, like many of you, we had a lot of uncertainty in the very early part of the pandemic about our financial condition. About a third of our revenue comes from our in-person events. About a third of our revenue comes from our CDFI loan portfolio. And we still rely in part on operating support from our funders. And all of those, we weren't sure when the pandemic hit what was going to happen. We were fortunate that a few months into the crisis, we felt more secure about our financial position, as our sponsors really stepped up with us and stuck with us, even as we changed to virtual events. Our funders stepped up and our portfolio remained solid. And we were able to offer interest deferrals, extensions, and other modifications as our members needed them. This allowed us to really double down on our efforts to support all of you, such as expanding our pass-through grant programs, having our highest volume of lending this year that we've ever had, and expanding our voice and strength work, as Lisa talked about. To provide a bit of a historical context, OFN's assets under management have grown from about 100 million in 2013 to close to 900 million in 2020. We were able to bring different programs and products that expanded our ability to provide long-term and patient and affordable capital to all of you. For example, in 2018 and 19, we started 2 single investor funds, which reached 36 CDFIs with $30 million in a new long-term EQ2 product. It was the first time we offered an EQ2 product. In 2020, that jump is bringing on a new partner in Google, which provided 170 million in favorably priced long-term loans, which will allow us to reach 60 to 70 members. I always get a question about OFN's leverage and are we doing enough to leverage our net assets? With our new partnerships, we're really working to leverage our balance sheet to best support all of you. By way of example, for our Google partnership, we used an innovative syndication model where 80% of every loan that we make through that program is on Google's balance sheet, and we only hold 20% of each loan on our balance sheet. We know as we move forward and try and scale our work, we'll need to continue to find innovative ways to further leverage our balance sheet. We've also been working to expand the reach of our financing. OFN currently has approximately 90 borrowers. That's up from 60 a couple of years ago, and we expect that number to continue to increase as we deploy funds from Google and other sources. You can see from the breakdown on this chart that we're really reaching a diverse range of our members in all asset sizes. 17% of our loans are to CDFIs with less than 25 million in assets, and an additional 26% are to CDFIs with 25 to 50 million in assets. We were very excited to have a new corporate partner in Google join us this year, which helped us expand our lending during the crisis. We were pleased that they were able to provide the type of capital that all of you need: long-term, low-cost, flexible. With a grant from their philanthropy, we were also able to provide grants in conjunction with our loans for some of our borrowers. As Lisa refers to them as stapler grants. We plan to be able to use this model more going forward. The capital with the Google partnership is focused on CDFIs serving Black, Latinx, Native, and rural small businesses. We were more than 3 times oversubscribed for applications for this pool of capital. So we know we're not able to reach all of you that need our capital. And we know that our work is not done to raise this type of capital for our industry. I want to provide a couple examples of the diversity of CDFIs we were able to reach through this program. Wakeif is a CDFI based in Washington, D.C. 100% of their lending is to entrepreneurs of color. They had assets less than $10 million last year and are looking to grow. And we were pleased to be able to provide them a loan and grant package through this program. In contrast, Grameen America has 150 million in assets. They're based in New York. They're a microfinance organization dedicating to helping low-income women build small businesses. They're focused on the immigrant community with their unique peer lending model. 2020 will be one of our highest years ever in raising pass-through grants for our members. We have approved 123 grants to members for a total of nearly $10 million. Lisa and I had a lot of conversations early on in the pandemic with funders, and whenever they asked, what does our industry need? We were consistent in our message of saying flexible grant support to expand lending, shore up balance sheets and loan loss reserves, and build capacity. We were able to raise 2 different pools of grant funds through Capital One and Morgan Stanley to support some of our smaller CDFIs and helping them withstand the pandemic. Continuing to raise this type of support, including our stapler grants like Google, will be important for our efforts going forward. I wanted to provide one example of a CDFI that received a $50,000 grant through our small grant program. Chehalis Tribal Loan Fund is a native CDFI that provides training, technical assistance, and small loans to support the tribal reservations and surrounding communities in Grays Harbor, Thurston, and Lewis counties of Washington State. This grant will help them retain staff and help their organization weather the crisis. I now want to turn it back over to Lisa to close us out.
Thanks so much, Beth. So normally we'd be in a big ballroom and we'd be getting ready for the question and answer phase. And we're going to do that just shortly. I'm going to bring Seth back in. But I just wanted to give a bit of a commercial for tomorrow's big plenary. And I wanted to encourage you all stay with us, day 4 of a conference. I think it's an important one. We've spoken a lot about our intentions to continue to grow. And we titled tomorrow's session, attracting private capital to the fight. And you're going to meet the treasurer of Google, Juan Regla, and you're going to hear from Goldman Sachs and U.S. Impact Investing Alliance and the Candide Fund. And we'll close with an address from Mark Morial. But it is also a time that we are just going to put a stake in the ground and say it is time to grow. It is time to start new efforts to finance justice. So I hope you'll come to that. We hope to be making even a bigger announcement. So that's my wink, wink. And just continue to stay with us. This is an extraordinary time, and we're not going to waste a minute of it. So I'm going to ask Seth to come back on, and I am going to open the floor, the virtual floor, for questions and answers, and ask Seth to help us lead that part. Seth, as you know, is our head of membership. He's gonna keep those ballots. He keeps us moving, and I literally think knows all 337 members. So welcome, Seth.
Thanks, Lisa. Thanks, Beth, and thanks everyone for tuning in and watching and attending the 2020 virtual conference. So some questions are coming in. So just so you know, there's a Q&A tab to the left of the chat where you can type in questions. So I've got a few questions just about the board election process. So if anyone has not received their ballot and they're the voting delegates, because there was a specific link in that email, some are going to the spam filter. We'll be emailing those to you. I know a lot of people have gotten emails from me, but thank you for bearing with me on all those emails. Then the other question came up was just who is coming off of the board. So there's 3 elected seats that are elected from the members that are up this year. The 3 seats, so Crystal Cornelius is currently serving on one of those seats, and Crystal is terming off of the board. Carla Mannings is in one of those seats, and Carla is running for re-election. Donna Gambrell is in one of those seats, and Donna is running for re-election. And then Jim King is currently serving in an appointed seat, and Jim is terming off this year. So again, if you're a voting delegate and you have any questions, just please shoot me an email and I will get the ballot to you. So the first question came from Calvin Holmes at Chicago Community Loan Fund. And Calvin's question is really around just the continuing, just our ability to kind of continue fundraise right now. So obviously with the pandemic and CDFI just having the momentum, how can we kind of potentially keep that momentum going? Or do you think we may expect not as much kind of grant opportunities in the future?
Yeah. Calvin, thank you for that question. And you asked it in a very powerful way, how to keep the momentum. Here we said it's November 11th. My belief is that what this pandemic and racial reckoning has done is open some new doors. And part of the fundraising that we are doing as a network for this network is to expose and educate new donors. We're sticking close to the ones we know well, like our banks, who've been CRA motivated to support this field for many years. But we're also really trying to open new doors. And I think many of you have heard that the Business Roundtable not only had a stakeholder pledge, but this summer, under the leadership of Jamie Dimon and the head of Walmart and Robert Smith, created a Committee on Racial Equity and Inclusion. And one of their recommendations for all 200 members was to take seriously the need to invest in CDFIs. So you've seen multiple pledges. So Calvin, my hope is that we will all push. And if you're in a location with any new of these corporate partners, you should be pushing. They want to get to know you. But as a network, one of the things that I can do and our team can do is continue to expose leaders of these corporate philanthropy to our work. So I take that as one new opportunity. And for me, what Beth described in Google is really a new kind of opportunity. We weren't just on the philanthropic side of the house. That was powerful, and that's how Google met us. And that's how we ended up with $10 million that we can largely pass through to our members. But we were on the treasurer side of the house, and you'll hear more about that tomorrow. I think that's a really important distinction. And I think it opens up a way that we can share more resources. This is the treasurer placing in through this interesting syndication model, debt with us, through us to you. So one big arena of our fundraising is going to be these new partners. We've still not really cracked the code with the impact investors, with all of the donor advice funds. And that's one of the reasons I think tomorrow is also important with Fran Siegel of the U.S. Impact Alliance and Morgan Simon from Candide. We've got work to do in opening more doors for the traditional impact advisors. I said in my talk with Brian, how can we do what the environmental field has done? And Brian Moynihan of Bank of America said, yes, we should help you. So I think there are some arenas for more fundraising. This is the private arena. Of course, we know the public arena is still where we have major pushes going, including funds for the stimulus and funds for an augmented CDFI fund. So my main message is that I think our work as a network is to open some new doors, to speak for those who don't have a corporation of major size in their backyard, to say, bring your dollars, let's get them to the pockets that need them. We know philanthropy is very unequally distributed in America, and new doors, and then push on old ones to do bigger things. So that's going to be our watchword. Now, Beth, in addition to being my CFO and our CFO, leads development for OFN. So Beth, that's also a good question from Calvin for you to reflect on if you have any nuances here.
Yeah, the only nuance, you did a beautiful answer. The only nuance I would add is when we're pushing, with Google, we were able to get 10-year money from them, which is, we were surprised actually that they were willing. We said, this is what our industry needs. This is not just a recovery effort. This is a rebuild, and your dollars need to stay in here for a long time. And so we think it's important as we get some of these new investors that, some of the corporations might not be as focused on this in 3 years, but we want their dollars for the long haul.
Great nuance.
So a couple more questions came in, but both for Beth. So both, could you just talk a little bit about OFN, like our portfolio, and how it has kind of withstood just the crisis, and have we had to issue any deferments? And then also, Beth, if you could just talk a little bit about where our net asset ratio stands right now, and then if there is kind of room for leveraging that additionally.
Sure. So our portfolio has performed well during the pandemic. We did offer flexibility to our borrowers that needed them. So probably around 10% of our borrowers accepted a deferment. We did a 6-month deferment of interest. We've also done some modifications to covenants as needed. I know a number of folks were out of compliance, so with covenants, with bringing on all the PPP loans to the balance sheets. So we, but in terms of the performance of the portfolio, it's performed quite well, and we've been pleased. We know more changes will happen, towards the end of this year, early next year. We're looking at it closely. Our financial services team is doing a wonderful job. They're stress testing and doing other things. But so far, we still have no delinquencies in our portfolio. We haven't done any write-offs this year. So in terms of our net asset ratio, I'll sort of talk about our adjusted net asset ratio, backing out our pass-through grants, because the pass-through grants sitting on our balance sheet sort of skew it, but it's right a little bit above 30% is our net asset ratio. And that has been, coming down a bit as we're bringing on new dollars onto the balance sheet. And we're really looking at, how we can, think about that. We think we'll be growing our balance sheet. And net assets are always sort of the biggest constraint to growth, as all of you CDFIs out there know. And so we're looking, how can we use the potential of subordinated debt or guarantees as we sort of think about growing our balance sheet.
Great, thanks. And so I think this will be the last question, but this is from Mary Fran Riley with Axion Chicago, or Axion serving Illinois and Indiana, I think is the name now. But Lisa, have we just been approached by the Biden administration just on the transition, or where we may play a role in that?
Yeah, love that. I think there's been numerous approaches. There were plenty of volunteers that were involved on the campaign. And as the Biden administration takes its shape and has a transition team, we'll have both formal channels and informal channels to advance our work. It's early days, but I think much of what was done in the campaign season to prepare position papers, to get set for this, I think that will have influence. And I think another thing that is great about this chance is to kind of reset. You saw the, frankly, deep bipartisanship that we still have and we still enjoy. This is still going to be a tightly divided Congress. As the administration, we think, will make bold moves, but we'll need Congress to advance them. And so one of the things that we are looking forward, and you heard it in the remarks on our opening plenary, is still retaining all of those allies that we will need to take whatever the Biden administration advances and pull it over the finish line. So, but I do think there was plenty of outreach and people, appropriately did this on their volunteer time. And I think the formal ties have started, but early days, and I'm confident we will have, open ears and to our ideas. So, Mary Fran, thank you for that, and thank you for your work in Chicago. I think what's really happened is that this time of crisis has shown even the biggest skeptics, who tried to run a PPP program with the traditional banks, and it didn't work. It didn't get to where we needed. So I think even our skeptics have really acknowledged that we're needed, we're necessary, and that the programs that traditionally support us must be expanded. And as someone who worked in the last administration and saw how a big agency like the Department of Agriculture needed and could help CDFIs, I think we're in good position to take this moment of new actors in DC and find the right partners.